Good evening, all. This is Shay Horowitz, ShogunTrading.com. This is a free weekly newsletter. Hope you had a great weekend. Last week was one of the most volatile weeks I've ever seen. And it was enjoyable for some and very troublesome for others. It depends on what side of the trade you're on. I released a newsletter exactly a week ago. If you go back and listen to it, you would see that we talked about this. And we talked about the market taking a dive. Even the week before that, we also talked about that as well. I want to start off with a little bit of perspective. This is a chart of the Dow Jones Industrial Average on a monthly basis. Every bar is a whole month. And I want to show you the crash, the absolute collapse of the market in 1987. See that little blip on the chart? Let me really point it out, because that's a really humongous blip on the chart right there. This blip was a 41% dive. That's a 41% dive, and that was the end of the world. People were jumping off of building because of that dive. And look what the market did after that. Yes, it took a little while for it to get going again, but once it got going, it really took off, and it went from the 1666, which is the low, 2000 level, all the way up to 14,000. In just a few years, it went up to 10,000, 5 times as much in just a little bit over 10 years. That's not too bad. Now, if we look over here, if I take the high and I take 41%, I got 83.76. And look, that's exactly where we're at right now, is 83.76. So 10 years down the road, you might see this. If we're talking about 5 times as much, you know, you can do the calculation yourself. As a matter of fact, I'd like to do the calculation myself. 11,000 divided by 1616, that's 6.8. 6.8 times where we are right now, 84.50, you're talking about Dow Jones at 57,518 in 10 years. So that's basically the perspective. That's basically the, when people think it's the end of the world, it depends on your time horizon. If your time horizon is good, then this is a time to look to buy in. This is a time to look for opportunities, not a time to give up on the market. If you don't have that time horizon, well, you really shouldn't have been that invested into stocks anyway. You should have been more towards cash. But if your time horizon is a little bit longer, it will recover in no time, and you'll be okay. I hope that's encouraging. I hope that this picture is encouraging. You can see the 1987 crash is just a blip on the screen. Imagine Dow Jones at 57,518 in 10 years. Anyway, that's the point I wanted to make as far as Dow Jones is concerned. Why is the market coming down? The market is coming down for a few reasons, and one of the least talked about reasons, as far as I'm concerned, is the fact that investing is going to fundamentally change in less than a month when we have elections. I'm not being political over here, but when we reinstate capital gains taxes, when we increase taxes on the super wealthy, when we force employers to pay extra taxes and so on, whenever there's a class warfare, then the market gets nervous. The market really doesn't know what to expect. If Barack Obama takes over, and probably will, you're talking about a very fundamental change in the way the United States capitalism operates, which the market is very afraid of. Frankly, I don't. I'll leave the frankly to myself. Try not to be too political over here, but you get what I'm saying. Is that there's a fundamental change out there. So how far down are we going to go? Here's a weekly chart, just to give you an example. I think we're way overextended. I think we basically crashed last week. A tremendous 20% dive on the market. I think it's overdone. One of the things that I saw on Friday, that was really interesting for me, is a lot of blocks. A lot of blocks came in first thing in the morning. And I see blocks because you can see lots of trades all at the same price and flashing really quick. Then that means that there's a huge block going through. When I talk about a block, I'm talking about 100,000 shares, 200,000 share trades. and that was exactly happened at the bottom. Let's go for a daily. And you can see on a daily how the market opened, and then it took a dive, and that's when we saw the blocks coming through, and then the market was up 300, and then it closed on the negative side again. Is it going to keep going down? Yes, it's going to keep going down. Why? Because it's in a downtrend. When is it going to stop when is it going to stop going down? When it stops going down. It's going to stop going down when it starts going back up. How do you know it's going to start going back up? You're going to know when the market does this. When it bounces back up, comes back, tests it, and then comes back up. That's the signal that I'll be looking for to go heavy into the market. My plan is to go heavy into the market, invest heavily in it. I think there's trillions and trillions of dollars out there sitting on the sidelines right now, waiting for that second bounce, waiting for the market to show kind of a sign of life, and then they're looking to jump in. If you are looking to jump in, here's some ideas. Spiders mimic the S&P 500 100%. Of course, you can take the leverage spiders if you want to, but that's completely up to you. That's one. SPY. QQQQ. That's the power shares. This is ETF on the NDX, on the NASDAQ 100. Top 100 stocks in the NDX. Diamonds. DIA. That's on the Dow Jones Industrial Average. Of course, Spiders is on the S&P 500. I don't suggest that you buy right now. I don't suggest that you go in right now, but I suggest that you do look for the bottom. Be prepared for the bottom. And when you see the bottom, when you see this, you start buying, because it will come back, I think, very, very quickly. When is that all going to happen? Frankly, I think within the next couple of weeks. And the reason why I'm saying is because, you know, the result of the election is basically going to be known in the next couple of weeks. It's basically known right now, but I think it's going to be more known in the next couple of weeks, and people are going to be anticipating the result of the election. And remember that the market always does everything ahead of time. The market always invests, and it does not react to news. It tries to predict the news and take a position before the news comes out. One of the reasons why the market is diving right now is because it thinks of what's going to happen next. It wants to know what's going to happen next. And when the news comes out, exactly the opposite is going to happen. So be prepared for that. Let me see what else I want to talk about. Yes, as far as taking advantage of these trends, you really have to take control of your finances. That's extremely important. You have to be a trader. You have to be in charge and take a negative position if you need to, or go into cash if you need to. If you look back, I talked about these stocks before. RCL, I gave you this one as a freebie not too long ago at 30. We showed it again at 23. MNST, that worked very well for us. VMW, that worked very well for us. MTL, that worked very well for us, from 16 down to 6. That's a 10-point run. Joy G, that worked really well from 41 down to 25. TRA, that worked very well for us, from 27.80 down to 16. We traded Apple from 107 down to the $85 level, and we traded AMLN from the $15 level all the way down to 11. These are tremendous profits. They were very nice across the board. We were able to carry them through the whole trend and have a lot of fun with them. And that's something that I gave you last week and the week before that. So you've seen these before. Anyway, that's all I have for you for this week. I don't think that the trade is going to happen right away. I think it's going to be a few days, a few weeks, a couple of weeks before it actually happens. But when it does, be ready, because like I showed you, the crash is just a blip on the screen. Have a great night, and I'll talk to you tomorrow. Take care.